Yes, CBN just cut interest rates. I'll be showing you hidden money tricks that investors can use to navigate this particular news. Now, everyone got these news. Everyone saw this news. Most people scrolled through it. Most people scrolled this. In fact, a lot of people argued about it on Twitter. But for the smart investors, they smile because they already know how to harvest the opportunities that are resident in this particular news. Now, let me explain. Now, imagine you're a farmer and you're working under a management and you get to plant maize, cassava, plantain, tomato, banana, and all of that. Now, you would agree with me that all of these plants have their own season of harvest. They do not mature at the same time, right? So if the maize finishes early, for cassava and plantain, they will still bring in income later. They will still bring in harvest later, right? So now imagine while you're still under that government or that management, they make an announcement and tell you from this period, we'll pay farmers under our management less for every new crop that they plant. Can you tell me what will happen next? Yes, you can drop it in the comment section. Here's what will happen next. Everyone who already planted before that announcement, they'll be sitting on a gold mine. Why? Their crops will become more valuable by virtue of what? Demand. Does that make sense? So it is the same thing in season and out of season foods, where we get to buy foods and say, this one don't take for market. Now, original one. So that's exactly how the bond market works. That's exactly how the bond market works. For the bond market, we get to give our money to the government and they pay interest. But you see, it is much more than that. But that would be a separate video entirely. Let me just stay on this particular topic about the CBN and the interest rates that they reduce. So here's the logic. You see, when a central bank cuts down interest rates, it means that the government is now borrowing at a cheaper rate. So if you're already holding a bond, just like those farmers who are planted before that announcement, they will be paid a higher rate. Now, but every new plant, every new crop that they take on, just like for you as an investor, every new bond that comes out after that announcement, the interest rate will be less. And investors will be rushing to get the old ones. So here's exactly what goes on in the economy. There's a connection between the interest rate and bond price. Let me establish that fact. There's a correlation between the interest rate and bond price. Now, for the bond price, if it goes down, the interest rate goes up. If the interest rate goes down, the bond price does what? Goes up. That's why I'm using this simple graph to explain this particular concept. So whenever the interest rate is increased, it will affect the bond price. It will go down. Whenever the interest rate is reduced, it will affect what? The bond price. What will happen? It will go up. Now take note of this. Now, but there are also three elements that are very important that I want you to take note of. First, it is the interest rate. Second, it is bond price. And third, it is bond yield. I'll explain it as I move on in this video. Say that again. There are three elements I want you to hold on to. First, interest rate. Second, bond price. Third, bond yield. So the first key that we can take advantage of here is if you are an investor with an investment in the bonds economy and you are investing for a long time, here's what you should do as the first money move. You can literally sell off your bonds now at an expensive or premium price because a number of investors are looking out for those old ones with higher interest rates compared to these recent bonds that will be released with lower interest rates. Does it make sense? Okay, so If you have a question, you can drop it in the comment section for me, and I will do well to take care of it. So let's move on. So here's where most people get lost. Bond price, bond yields, and what? Interest rate. I told you to hold those three. Now, let me explain it. You see, the price of bond and the interest or the yield of bonds, they move in opposite direction. So if the price goes up, the yields go down. That means the return on bonds just becomes smaller. So, but if the price goes down, the yield goes up. That means the return on the bonds becomes what? Bigger. So if you have £1,000,000, for instance, you are investing in bonds, and the interest rate is increased, it means that the percentage, the interest rate on that £1,000,000 would probably be 17%. So the quality, the value of that bonds in the market would drop. That's the price. The price would drop, and the interest rate on that your money would stay at 17%. But what if the interest rate is reduced, or it falls down, or it crashes? Here's what happened. The value of that bond increases, but the interest on that your 1,000,000 will no longer be 17%, to fall to probably 14%, 13%, or 15%. Here's why bonds is very important. I'm trying to stay with this topic because bonds is a whole lot of topic. Maybe later I'll try to do bonds, understanding bonds in 4 series, right? So if interest rate, this is what, I want you to understand. If interest rate increases, the yield, the interest on the money would increase. I like you to say that with me. If the interest rate is increased by central bank, the interest on my money with the government would increase, right? Then if the interest rate reduces, the interest on my money will do what? Would fall. Does that make sense? Yes. So with that illustration, I do not think you'll forget that. Now, so the question is, where will investors run to for higher returns if the interest on the money they will get if they are investing with bond reduces? Which market would they now turn to? Go ahead, make a guess. The stock market. That's exactly where investors will go to. Remember, I made a video one time about USD. I think some months ago, I said investors are not loyal to the economy, neither are they loyal to the market. They are loyal to their interest. So if the stock market would give them a higher return because interest rate on bond is going down, they will go for stock. Then if stock is going down because interest rate on bond is increasing or accumulating, they would leave stock and go for a sure, predictable investment options or returns. Does this make sense? Okay. So every time the central bank cuts the rate down or reduces the interest rate, money would rotate from bonds to stock. And every time the central bank increases rates, money would rotate from stock to bonds. Remember, like I said, investors are not loyal to the economy or to the market. They are loyal to their interest. And as a matter of fact, let me ship this in. That's why if the rate is increasing, if the interest rate is increasing like it was increasing some months ago, there are several consequences, no doubt. But you see, foreign investors get to now invest in bonds, bringing more dollars to the country, while Naira becomes weakened. And if there's a rotation, because the interest rate is no longer increasing, remember, they are tied to their interest. They are tied to their own selfish desires. They will pull their money out of that particular what? Asset class. In this case, bonds. So there is always a money rotation going on. So investors are always chasing what? Yield. What is the return on their money? So they want their money to work hard. So where would they go? This is the second money move. This is the second key I'll be giving you as one of the hidden money tricks for investors. Where would they move their money? Now that we have established the fact that they are moving their money from bonds to stock, where in this stock market would they be moving their money to? Now, I would mention three, just three for you. Number one, the banking sector. Why? Because borrowing will become cheaper. The banks usually benefit from cheaper loans. If the interest rate on bonds is reduced, just like the interest rate has been reduced by central bank, it means that investors, businesses, individuals who wants to collect loan from the bank, the rate at which the interest rate that banks will be charging these people and these businesses would be reduced. Does that make sense? So banking stock will be one of these beneficiaries. Then secondly, manufacturing stock. Why? Because expansion is usually easy with borrowed money. You get? And then thirdly, consumer goods stock. Why? Money will be cheap. Inflation will be reduced to some extent, even though in the long run it will increase again, thereby forcing CBN to increase the interest rate. Just all of those economic policies game. But you see, consumer goods stock will benefit from this money rotation because spending would increase. There'll be more money. So they would spend and do dorime. So, but you see, that's where the profit hides. So these sectors that I just mentioned, they will quietly benefit from this cheap money and this money rotation. So this is the second key, second money move. This is how you take advantage of this. You want to reposition into value and dividend paying stock. Notice, I didn't say growth. I said value, dividend paying stock. Value and dividend paying stock. That's your second money move to take advantage of these hidden money tricks for investors. Now, there's always a catch, right? When borrowing becomes cheaper, it means that the tendency to spend increases. Because you get money easily with low interest rate, and then the tendency to want to blow it up like the prodigal son increases. So when spending increases, guess what? Price starts creeping up gradually. And that's how inflation sneaks back into the room. Quietly at first, or noticed at first, but guess what? So while you're enjoying all of the current rally, you're keeping your eyes, you should keep your eyes on the horizon. Because when inflation starts to rise again, the central bank, like they always would do, would reverse and raise the rate back up. So in the last 5 years, this is the first time the central bank is reducing the interest rate for the first time in 5 years since 2020. Right? Sometimes they increase it, sometimes they sustain it, sometimes they reduce it. These three actions is what they always do. So that's when bond prices will begin to fall again, and then the yields will climb back up. So for investors who want to take advantage of the bonds economy or the bonds market, is now the right time? Well, you decide. And of course, your own personal goal will decide. But if you want me to create a portfolio for you and explain that in a much deeper way, drop it in the comment section. I would likely do a video on that. So let me give you a third money move. Let me drop a key for you. It's a third money move. What do? Stay flexible. Liquid cash. Hold your liquid cash. Keep a portion of your portfolio in liquid asset cash. Right? So that when the rate goes back up again, you can replant your seeds like this farmer. You can take advantage of these opportunities. Does that make sense? Okay. So now, we have established the fact that CBN has reduced the interest rate and what it means for us as an investors and how to position and take advantage of it. Now, in my course, Profit Hunter Blueprint, I did an extensive framework, models, and all of this on how you can read news and interpret it and see, find, and pick investment opportunities from just the news, right? So most people get to read the financial news, but investors like you, investors like me, investors paying attention to this YouTube channel, are the ones who would actually decode these things and turn these headlines into opportunities. So when next you see CBN cuts interest rates, don't just scroll past it, right? Don't look and pass. When next you see CBN increases interest rate, not look and pass. Because every of those information is a message. Every of the rate cut, the rate increase is a message, right? And because it is a message, it carries a code, it carries a keys for every money making opportunities in the financial market. And that is the cheat code that smart money, institutional money, the bank and the financial institutions are currently using right now. Now, if this video has been of help to you, has cleared your doubt, provided value, kindly share, like, and drop a thank you message for me in the comment section. Now, until we see again, this is Trader Cassie. Don't forget to stay profitable. Have a great and wonderful evening.